Hi guys, quick update here for YouTube. It's 24th of March 2025. Hope everyone's doing great. If you want to know more about what we're doing here in the group, just come and join the masterclass here for independent learners. We've got a mini and a full version, and the secret Facebook group is on this link here. It's cheaper over 3 months, and you can pay via crypto if you need to. Obviously, there's a lot of jokers in this space. We've been doing this for over 7.5 years here, so we have the longevity, and I recommend everyone who's new to the channel have a look through some of the greatest calls in the history of mankind. YouTube do often delete a lot of these videos automatically. I'm not too sure why, but if you want to know more, just come and have a look. And we do have an educational playlist, which I would recommend to everyone as well. Just find playlists and find educational videos which are here. There's only 11 videos, but if you want to know more, just take the masterclass. So let's just have a quick look at Bitcoin here. As you can see, we are really struggling here, and I think Bitcoin is poised to make its next move down. Let's just pull it up here on the futures. Now, to me, this current move that we're in is corrective and not impulsive. So this could fall at any time. We do call it Turnaround Tuesday. For those who are wondering what's going on here, these blue lines are the extended hour session. So the way to sort of just change the settings there, because it kind of gets in your face a little bit too much. Just drop the opacity to sort of 1%. Well, 2% is okay. I kind of have to know it's there. I suppose you don't even really need to know it's there. You should know what time the overnight session is, but that's how you sort of adjust it. So to me, this is a W into here, an A, B, C into here. That would be a 3, 3, 5, and now an A, a B, and a C. So all we had to do, and we did a video on this just this morning, today's update got released just a few hours ago. All we have to do is really just take out that high. Now, could it go a little bit higher? I suppose it can do. 90k is going to be a bit of a push, but it does make a psychological number. So W, A, B, C. So it's a W into a 335X, and now it's another A, B, C. So it's a larger W, X, Y. So that kind of gets you to around 89,620. So we'll just mark that one out there. And we can also have a look at the algo target for this move from here to here. Well, the 1-to-1 is coming in at around 89, just above then, just above there, and the 89 algo target is coming here. So it might go a little bit higher, but ultimately this is setting up for a short, and to me this entire move has been a bit of a wedge, as you can see here. And wedges, rising wedges which look like this, are bearish. Okay, so rising wedges can be bullish if the context is correct. Let's say it's a rising wedge into a leading diagonal one, then, well, I mean, even then the move coming out of there is bearish. Okay, so falling wedges are bullish and rising wedges are bearish, right? So, but let's just say hypothetically that was a 1, you know, then it could go into a 2, then it could go in 3. Obviously, I don't think that's going to happen. This was a weak low. We've taken out the low. There's still quite a number of weak hands here who are trapped in this market above 100,000. They have an unfavorable location. Everyone's bought at the dip. We've examined this dip before. It's a weak low. So to me, this is just setting up its next move down. And the next big move down, that kind of projects to just underneath, you know, 69 grand. So this is going to get a lot worse. I mean, 69 grand is not the low, obviously. This is going far lower than that. We can't really give away too much here on YouTube. The only other thing I want to just have a look at while I'm here is the head and shoulders target. I think we've probably already hit that. Well, technically we haven't, so it's a 73.35, so that is the 1-to-1 with this distance here. So it's 110 to 89. How much is that? Is that 90, 20? 20 gets you 70. So on the log chart, is 73. On the linear, surely it's closer towards 70, as you can see here. So 70 is taken into account the linear. So the linear distance, which obviously is just 108 minus 89, which is roughly 20 grand. Take that off 89, but the logarithmic chart suggests 73,000, right? So either way, whether you're going off linear or log, we discuss in the masterclass which one you should be using. But regardless, you know, some people do like to use linear for this particular double top head and shoulders pattern, that still gets you here, right? So we have unrecognized targets, yeah? There are still way lower targets than this particular low here, right? Everyone thinks this is a moonshot. I don't understand where this banana zone coming, is this from Fernando Morientes, Ronaldo, and Michael Owen, and the fourth guy, Raul? So who is it, right? There's plenty of YouTubers there. Once again, everything's on here. You don't need to follow the famous Galactico team of the 2000s, which Real Madrid, technically, they never won a Champions League. There's a reason for that, because we've got all the Champions League, right? We've got them all here. All the single greatest calls in the history of mankind are here. So there's a lot of amateurs here who are just basically blagging it up and down, talking about banana zones, apple zone, right? This is not the breakfast table, right? We're here to try to examine where this chart is going in the short, medium, or long term, and we have the accurate wave count. There is no way this is bullish. This could fall at any time, right? And people are getting very confused with what the global M2 liquidity is telling them and what the dollar is telling them. The pound's very important and the yields are very important. All of this, you have to try and put the picture together. We can't go over how to interpret over that, all of that whilst we're doing this YouTube video, of course. But either way, it's bearish, okay? And I've been looking for a death cross on the 18th of April from 3 months ago. Right, from 3 months ago, we had marked out a death cross. We don't need Vladimir Klitschko's favorite indicator over here, but let's just put it up. I mean, it was the 5th, then it was the 7th, and now he's obviously, maybe he's undercover part of the group, Vladimir Klitschko here, and now he's probably changed it again. I mean, I've been calling a death cross on the 7th, on the 18th of April, and now I bet he's changed it again. What's he changed it to now? Let's just have a look. What's that? June the 6th? That can't be right. June the 6th. So obviously that's incorrect, because this is not the full market, is it? So let me just pull it up on a 7-day market with actually 8 years of history. Well, there you go. April the 8th, right? So obviously, I mean, he's gone from the 5th to the 7th to the 8th. And now eventually he's going to go to the 18th. Regardless of when it is, it looks bearish. I mean, how in the hell does that look bullish? People, I mean, you would have to call that a leading diagonal 1. It's going to go into a 2. Banana zone, this, that, and the other. So if you don't want to follow amateurs, come and join us in the group. We actually know what we're doing, right? Because obviously the stock market looks very, very bad too. It looks horrendous, right? So really big moves are occurring here, and those who are trapped in here, like Apple, I mean, last time I checked, it's in 150 ETF. So anyone who's holding or who's listening to this, who's a long-term investor, let's say they got a SIP, they got a Roth IRA, got a 401k, whatever they have, likely they're holding Apple. Where's that going to go? Doesn't look very good, does it? Every day a sucker is born, unfortunately, right? So anyway, that's the death cross. This doesn't look very good. Like I said, we have the line in the sand here. Well, it's not a line in the sand. It's more of a zone. If we manage to miraculously get above this, obviously, then the market has changed. All of that is the sort of shakeout. Then suddenly something changes. I don't think that's going to happen. To me, the volume is still pointing to, largely downside movement here. On balance volume, I mean, we've got so many indicators here. I mean, we don't use any of these as a primary tool of analysis. That's the difference. They're not primary tool of analyses, but they can be used as secondary. I mean, in terms of on balance volume, we're as low as we were back in November. Of course, you do have to learn how to interpret that, but I'm just showing you the amount of volume that's on the down days relative to the up days. Let me just wake up on balance volume here. As you can see, it's still trending down. It has been doing for quite some time here. So the on balance volume doesn't really show us with any confidence that this market wants to go higher. So I believe the market is going to be open. The market is just open now. We are 10 minutes delayed here on this futures chart. And now we're in the regular trading hour session. So like I said, that looks more corrective to me than it does impulsive. So WABC into here, then another ABC. So confirmation of that. I mean, it's already broken this high. Maybe one more push up to those targets, which I've mentioned, and then we can start the big move down. We have left a large gap there too. So I would say if it breaks down to here, there's no longer any sort of corrective sort of move up, right? But either way, when this market actually bottoms, which is a very, very long way away in terms of the price, I mean, we're nowhere near a low here. You'll have to come and join the group if you want to know exactly where this market is going to go. The move out of there is going to be impulsive. It's not going to be corrective. How would you make this impulsive? You'd have to really blag that as a 1 ABC2 into another 1 2. Well, if that's the case, we're now in a third of a third of a third, and we're going to go all the way to 150,000. We don't think that's going to happen. So turnaround Tuesday, they call it that for a reason. There's not much else to really say. On the Elliott wave, it looks pretty bad. On the volume analysis, it looks pretty bad. The price action looks pretty pathetic. And just based on sentiment, most people are still clinging on to some kind of, this is the complacency kind of zone. So that was the euphoria. Now we're in the complacency. We're going to make all-time new highs. And, people just like to lose money. I'm not too sure why. So that is that. So it looks bearish however way you look at it. And as you can see, the huge volume there, huge volume days, they've all been down. All the big volume days have been down. This was okay volume on the way up, not bad. Not bad. Another large volume day. And now look at this. I mean, fine. We've not as of yet finished this candle. It is a Monday. Still, the volume's just not really showing me any confidence that it wants to go up. There are unrealized downside targets. There are many of them, in fact. Now it just comes down to who can hold their nerve if they're bullish here. Who can hold their nerve? But there's definitely, without a shadow of a doubt, otherwise the price would be half of what it is right now. There are definitely people buying here. You can see that. You can see there are retail traders who are buying here. They're absolutely convinced this market's going to go into a Real Madrid Galacticos, Raul Gomez, banana moonshot, off the breakfast table all the way to, I don't know, they've got targets of 250, a million, I've heard, 5 million, I've heard. So there's definitely people dollar cost averaging into this. But what do we know? How do we get these dumb bulls out of their bullish position? The market has to go down. The market has to wipe them out. This doesn't look bullish to me. Let's pull it up on a non-delayed chart. Let's get the live price as of right now. Doesn't look very good, does it? I mean, as you can see, we've pretty much taken out the high. So any time it does this, it's just waiting to go down. Like I said, if you relate this to here, we've said 89,000, 89.5 maybe. So W, A, B, C into here. Well, there's your 1-to-1. Is there any interesting price action up there? Any kind of stops we can run? Well, you can't really see them on the Coinbase. That's why I prefer looking at the futures. Yeah, I mean, that's it really. There's really not that much juice left. To me, all of that looks corrective. I suppose they could peak it here and then go into like another ABC and then do it again. So it'll be like a W, X, Y, X, Z. And then it could come down. So they could easily do that. So it doesn't have to go higher and immediately collapse. They could chuck in another one of these. So another correction, something like that, right? So they could easily chuck in another one, right? But then after the third one, it's definitely done. But to me, that's already kind of gone long enough now. And that just does not look impulsive. Do you really think this is the move? This is the kind of price action? After all that we've done on YouTube, does that really look impulsive to you? You're really winging it. And if you're winging it that much, likely what you're looking at isn't what you think it is. So to me, this market is still very, very, very weak. It's very heavy. Obviously, we are in the last week of the quarter, last week of the month. So there's bound to be some window dressing, which is also going on the S&P. Which looks, pretty awful there. So to me, that's just window dressing. I don't see that high getting taken out anytime soon. A lot of people I know are buying this dip. They're looking for an immediate move back up to here. I don't see it. To me, this is counter leg. And so much money is lost. Well, I mean, it's not really a B or an X. It's a wave 2, let's be honest. So much money is lost on these traps. And we speak about these traps all day long. That's where the most amount of money is lost. It's never on the wave 1, either up or down, that is. It's always on the counter leg correction that looks very convincing and is as in this case, it looks very convincing that the S&P, I mean, to me, it doesn't. It's going to peter out here pretty soon. Let's pull it up on the ES. Well, let's pull it up on a live market session here. So, you know, this is the count that people are looking at. That it's an ABC and then that's it. This is the incorrect count. This is obviously not the count. People think, right. But when is a dip not a dip to be bought, right? Basically this one. And this is where the most amount of money is lost based on what I've seen since '08 and definitely what I've seen since the first YouTube video, because people share with me what they do. Through email, through Messenger, through being part of the group, the courses that we have, YouTube, webinars, whatever we've done in the past. And a lot of money's wasted here. On these wave twos, like this looks awfully convincing. You would think, well, the S&P has always made a new high. Why is it not going to now take out the high again? Well, they're not looking at the underlying structure behind this market. This is not going to happen. This is a counter leg correction, and people are now going to be dollar cost averaging in. New money's going to be going in. Like I said, end of Q1, start of Q2. The new UK tax year is pretty much next week. Let's be honest, it's the 5th of April. So new money coming in from the UK, and all they've done right there is basically bought the top off, as it turns out, a wave 2. Well, that's the wave 1 down. So what does that mean? Where's the next move going to go? And that's where you have to be very careful. And I've said this since the first YouTube video. We're getting on to about 16 minutes here. Always be very careful around the end of the month, the end of the quarters, because there's a lot of what we call window dressing, which takes place to make things look a lot more rosy than they are. Because when things look rosy, people get bullish. And when they're bullish, they're more likely to invest more money into said fund or said whatever. But that's where I've seen the most amount of money lost. To me, the S&P looks quite dangerous here, frankly. I would actually call it dangerous. It's physically dangerous. Just like the Bitcoin longs are physically weak, this S&P is physically dangerous. And we know there's always been an overlap between this and Bitcoin, right? Fine, it's not 100%, there's a bit of a lag, whatever, right? They're both markers of liquidity. Well, let's have them side by side then. Just to make it easier. So let's put them side by side. So we'll just finish off on this then, because I don't know how we've managed to get onto 16 minutes. It feels like I've only been talking for about 5. So, you know, this is the S&P. This is Bitcoin, right? Fine, they've not topped up at the same time, but this you know, the S&P new high never really confirmed. Even the Bitcoin high was a failed high. This move down and this move down, they're very, very similar. I suppose you could read that as a 1, 2, 3, 4, 5 if you wanted to, like a leading diagonal one. I mean, that makes it even more bearish. Even more bearish than I think so. That is going to go to about 600. So, you know, it's really struggling. I mean, if that's not, if all of that is correcting all of this, then fine, we could go to 95, but it's too risky to me. That's not my primary count, though. To me, this is more correcting everything that's happened from here rather than from here. I mean, frankly, if it gets to 95, it'll be more bullish than it is bearish, as long as, because it would have reclaimed this level here. So without getting too confusing, Bitcoin is too risky, is physically weak, but the S&P is physically dangerous, I would say. I would actually call it, can you be dangerous and weak at the same time, simultaneously? I suppose you can. So we have one market which is full of physically weak, unable to bench more than, you know, half their body weight. And then we have the S&P, which is where most of the money is contained, and everyone's buying the dip. Everyone's buying the dip because that's all that they've learned since 2008. It's just to buy the dip. I don't know. Well, I do know. You know, to me, that's setting up a short into there. 59, 50. I forget the exact levels that we had on the ES with the group there marked out in the group, but to me, that's setting up a short. If that gets to 6K, if they manage to pull this up to 6K, that's setting up a short. I do not feel this S&P is ready to make a new high anytime soon. like I said, the most amount of money is lost here. Anyway, let's pull it back to Bitcoin then. We don't want to confuse the YouTube audience. They probably have no idea what we're talking about here. But take the masterclass if you want to know more. You know, it's good to be good at something. And if you've never been able to successfully navigate through the stock market, there's probably a reason for that. You're following the wrong YouTubers who are just chatting crap all day long, and frankly, you don't have the right knowledge. Okay, none of this MACD, RSI, you know, none of that nonsense works. It's all lagging. Whilst it might have some relevance as a secondary and tertiary tool, it's not the primary tool. Primary tool has to be everything that I teach, because we talk about the three variables: price, time, and volume. What else is there? So we break it down in the fundamental structure, right? We actually go right down and explain how this market actually operates. No good looking at indicators all day long. I'm just having a look at the Vladimir Klitschko indicator as a bit of a laugh, because you know, you gotta make these YouTube videos pretty exciting, otherwise everyone would be falling half asleep. So, you know, I don't need, you know, I told the group there was going to be a death cross on the 18th of April 3 months ago, right? So, you know, it's not the fact that, I mean, frankly, when it death crosses, you know, there might actually be some short-term bounce there, frankly. So, you know, but it doesn't look very good. It's really struggling here. And the S&P, I also think, is physically dangerous. I'm convinced people are buying that dip in their droves, and well, they have to be wiped out. Unfortunately, this is not going to be over on the S&P or the Qs until all the longs have been wiped out. And just ask yourself, is everyone around you euphoric, complacent, and probably they're not angry, depressed, or capitulating, are they? So we still have lower to go. Always be very careful towards the end of the month and the end of the quarter. Very dodgy moves occur. Anyway, Bitcoin, it's really struggling. It could fall at any time. Frankly, it's done what it had to do, which is break the previous high from a few days ago. And the highest target I have is really 89 and a half, maybe 90 at a push. But really, it's looking like a bull flag, a bear flag, a rising wedge is bearish. And the next move is going to be down, and it'll probably settle around sub 70k.